Hey, Isaac.
Hey man, how was your weekend?
Oh, I guess I'll start with Friday. So I left the office and then the elevator, like key card, wasn't working this time. So I actually talked to the lobby guy and then he sent me down. I realized I didn't have my keys. So I had to come back and I talked to the lobby guy again and he was not happy this time. And then I just, it was pretty good, dude. Thanks for asking.
No problem.
Hello and welcome to the Rich as Fuck podcast, the show where we talk about money, life, investing, and all things yachting. Today, I have the honor of having a very special guest, Scott Melker, aka the Genie of Gainesville, aka the Wolf of all Streets. What a legend for coming on the show. Everybody listening, please remember that this is not financial advice. This show is purely educational and informative. With all the boring shit out of the way, let's get into it. Hello, Scott. Welcome. It's great to see you again.
Great to see you again as well, although better on a boat than on the camera, to be honest.
So for those that don't know, I am, and I'm not even allowed. I'm not even sure if I'm allowed to say this, and if I'm not, we'll edit it out. But I know Scott because he was a guest on our boat before. Yay, crypto for affording charters. Um, Honestly, one of the coolest charter guests, the coolest charter guest we've ever had, and we stayed in touch. Over the past couple of years, and I've always been a big fan of his podcast. It's honestly one of the most informative yet non-echo chambery crypto podcasts I've listened to. You always get guests on that have contrarian views, and even the guys that are always on the show constantly debate each other about a host of different stuff. So I'm super honored to have you here. Crypto is a pretty sensitive one, and within the yachting community, like in many other demographics, it's kind of a polarizing chat. And normally, the moment I write about crypto, pop that up in one of the shows. It's quite divisive, but today I really intend on getting one of the subject experts in and kind of digging deeper into the topic. So you start out, can you tell the listeners what it is you do? How do you go from being a DJ to crypto, etc.?
I have no idea. It just happens. I've definitely been one who just kind of flows with where life takes me. And this is the direction that it pulled me in. But my original sort of interest in markets and in trading, which is how I actually got into markets, more as a degenerate gambler than as a deep believer in the asset class. But came from going to the University of Pennsylvania in the late 90s. So I'm 48 years old. I graduated college in 99. And at that time, it was like the ultimate investment banking and management consulting and Wall Street boom. So everybody I was in school with at Penn, because of the Wharton School, obviously, was heading off to Wall Street, right? Like it was as easy to get a job on Wall Street as it was to get Halloween candy on Halloween. I mean, I was in a fraternity, and my big brother in the fraternity said, "Hey, man, you got to come work at Solomon Smith Barney." And I was like, "I don't even have a resume, man." He's like, "You don't need one. I'm the recruiter. Just come." Right. It was that easy to get a job, which I didn't do because I wanted to be a DJ. And so I kind of kept that interest in markets throughout my music career and doing a million things on the side. And mostly as a trader, though, with various results, usually to the downside. So, I learned very quickly eventually that trading wasn't really the best way to approach things. But it was sort of when I had our daughter, and I was DJing, 200 and something days a year, mostly on the road, that I realized that wasn't going to be a long-term commitment for me. I'm sure yachties can definitely, feel the pain of that statement, knowing that you probably can't do what you're doing forever, right? Eventually you're going to get off the boat and you're going to have to find something else that you're going to do with the rest of your days. I can see you doing that to some degree right now with this podcast, obviously. Mm-hmm. And so I had already been trading, and in the DJ community, for whatever reason, I think maybe because they're risk takers and have a lot of free time during the day, trading crypto was just a huge thing. And so everybody started talking about it. You needed to buy Bitcoin, and then you send your Bitcoin to this exchange called Bittrex, and you can trade your Bitcoin for Ripples and Ethereums. Like everything was plural for some reason, because nobody knew what the hell these things actually were. Go trade for shares of Ripple. That was my favorite one because they're obviously not shares. These aren't stocks. It's not a company. And so I just nailed it at the perfect time. It was late 2016, early 2017. So I thought I was a genius. I was making money hand over foot. Started with $3,000. It was $30,000 in a week, through no skill of my own. And so I was the classic everyone's a genius in a bull market through 2017. And then, as everyone knows, who knows anything about crypto, it collapsed, right? And so, listen, I still ended up better than where I started by far, but that's what actually sent me down the rabbit hole, almost because it was cope, right? Figuring out, like, why am I doing this if it's all going down? And then really backed into the importance of Bitcoin, as an asset. We can discuss the rest of them as well, but I view it as Bitcoin and everything else. Not that there's anything wrong with everything else. They're just two distinct asset classes to me. And so I just became very passionate about it. And, in all those years of DJing and producing music for people and for myself, there was a creative process. And so I fell into being a content creator just because it was a continuation of the creative process from music, right? Looking at charts felt the same to me as producing a song in Ableton for whatever reason, the finding patterns and kind of getting deep down into it. And so I really just became passionate about trading. I had, 40 or 50,000 followers on Twitter from music, and I had like a huge Instagram following from music. And one day I just started talking about magic internet money and drawing lines on charts and sharing them. So of course I lost half of my followers immediately. Right? Like, shut up, DJ. And then for whatever reason, because there were some successful trades and good ideas, I started to gain a following, and it went from Twitter to me thinking, this needs to be longer form. So I started writing a newsletter. Then the newsletter got popular, and these guys I knew from Blockworks came and said, you should start a podcast. And I said, what the fuck's a podcast? Because I never listened to one or heard of one in my entire life. It's like, late 2019, early 2020. And I would love to say there was some master plan of this transition, but it just kind of snowballed, and I became more passionate about it. And therefore, because of the way my mind works, I wanted to talk about it more, which meant creating more content, which meant more followers, which meant a hunger for more content. And, it just continues to the point where it becomes what you do all day.
That's amazing. That's a pretty cool origin story. And I kind of like that you connect your creativeness from music to something like economic charts, because I think that's not something someone would say naturally. But that's a really cool way to land into it. And I kind of want to double click there what you said on Bitcoin and alternative crypto assets being two different asset classes, because I myself fell into the rabbit hole one bull run later than you, one cycle later in 2020. Also thought I was hot shit, made a lot of money overnight, paid off a lot of debt, bought a car for someone back home, like felt pretty cool. And then overnight, FTX happened. I didn't have any of my holdings on a ledger or a cold storage wallet. So I basically got fleeced with all of my assets sitting on an exchange. And expensive lesson, and not that I went all in. I'm pretty risk averse in general, but that was my genesis moment to kind of figure out what is this that I'm investing in, and that sent me on the belief as well that we are dealing with two different animals here. Bitcoin, yeah, I mean, there's a lot, and we're going to dig into this. I see a future in the rest. The rest is kind of a tricky one. You can throw things at the wall, and if it sticks, and there is asymmetrical return potential in a lot of these different assets. But today, for our listeners, for yachties that really don't know what's going on in the crypto sphere, I want to double click on Bitcoin. So a lot of people reckon that if you can't explain something like you're 5 years old, you don't really understand the concept. So I want you to explain what is Bitcoin as if I am a 5-year-old child sitting in a chair.
It's easy for me to imagine because I've seen you play with my 5-year-old and you're roughly equivalent. Honestly, so I've always kind of long joked that Bitcoin and crypto as a whole like need a new PR director. It's a bunch of tech nerds trying to explain complicated concepts to average people, and I think it has been alienating and has made it actually a much harder asset class to understand than it should be. So I think before I give the 5-year-old explanation, it's important that most people understand that they probably themselves don't know what money is or where it comes from. And so there's a basic education, I think, that's important on understanding how money comes from, how money's created, where it comes from, why it has value. That's probably a basis for getting that basic understanding of Bitcoin. But we'll go ahead and assume that people know that money is basically like any other shared belief. It has value because everybody believes it has value and because it's backed by the power of the military of your government, right? And I think we all know that monetary and fiscal policy are basically that inflation and increase in prices of items is the system. It's not trying to fight. Money is not trying to fight that system. The system is that the price of things will go up and that the value of your money will go down. So if we start there, and you can understand that Bitcoin was born of the financial crisis in 2008 and 2009, sort of the last great recession, gives you context for why Bitcoin is what it is. So people like to say digital gold. I don't really like that at all. We can get into that more deeply. I think it's much more than that because of the properties. But at the very basic level, Bitcoin is decentralized money backed by energy and science that cannot be controlled by any government or any single entity. And it's naturally deflationary because every 4 years, the new supply is decreased and there will only ever be 21 million Bitcoin. That's literally all you really need to know, right? Your money that you use every single day, you want to spend as fast as possible before it loses value. Bitcoin, you want to save as long as possible because it's mathematically programmed to beat your dollars or your currency in value over time. So people who approach life with a long time horizon and think about investing or their money over a long period of time want to own something that's likely to appreciate in value and that there's not going to be more of. It's really very, very simple. So you can get into the million reasons people think it's a scam or why that doesn't work or misunderstandings on why it can be hacked or it's just numbers in a computer. I understand all those things, but we all use the internet in our phones and you don't have any idea how those work and doesn't seem to bother you. You still use the internet in your phone, right? And so you can, I think, use that same level of trust with Bitcoin if you truly understand it, but even if you don't. So there's a million reasons you would want to own it, which I think is also very compelling. We can kind of talk about those as well. But at the most basic level, it's money that is created outside of a government that cannot be altered and is backed by math.
So I want to double click on that statement. So especially on the math and the science aspect, what do you mean with it is backed by science and math?
To mine a Bitcoin, which is kind of a strange term. We say mining, and I think that's because of the digital gold reference. They just call Bitcoin miners because people view it as digital gold. But the only way to create a Bitcoin is basically to solve a very complex math problem. And that math problem basically doubles in difficulty every 4 years, hence the rewards become half. And that's where the deflation comes from. But people set up these complex mining rigs, a whole bunch of machines that use a whole bunch of energy to race to solve this problem. And so roughly every 10 minutes, a block is completed, and that's the blockchain. So I know this is where it starts to get complicated, and these are things you don't necessarily need to know, but it can't be hacked. It can't be changed. Every transaction, basically every 10 minutes, goes into a block, never to be altered again. So you get this endless chain of things that can't be hacked or changed. And to basically confirm that block, to confirm those transactions, someone gets a reward in Bitcoin for doing that. That's it. And that algorithm can't be hacked. We can talk about quantum computing and all these things that could eventually, but as things stand right now or to the foreseeable future, it can't be hacked and it only becomes more difficult, which means that the rewards decrease. So if you want to just think about it in economic terms at the most basic level, if supply is decreasing and demand even stays the same, what happens to price? Everybody's taking Econ 101, right? Right. So if demand is outstripping supply, then price naturally goes up. And although it's volatile and goes up and down, you can see that over time, it's been the best performing asset since inception.
It's a good explanation. And that was definitely my light bulb moment. That was my aha moment, was the fact that this is the first asset class known to man that has a fixed supply. I think the digital gold reference is also likes to be thrown around because gold in our current, and it has been for centuries, is the most scarce asset, but you can always find more gold. We can go dig here in my garden tomorrow and find more gold. Bitcoin cap 21.
I'm coming over.
Bring the shovel. Bitcoin cap 21, supply of 21 million. And that for me was the aha moment, especially in a world where money printing happens so freely and there's just absolutely no monetary discipline. And our currency gets devalued so intensely. I don't think the average person on the street really understands that even if you're saving diligently, you are fucked in the long term.
Well, there was a time when you wanted to save in money and not in assets, right? Obviously, talk about the gold standard or when gold was money and go deeply into the history of money. But in theory, a quality money should be your savings. You shouldn't have to go hire a financial advisor just so that your money doesn't lose value over time and take risk to do so. And that's what everybody with money has to do. You have to buy stocks, you have to buy real estate, you have to buy all of these things, and then you have to do well enough with it to outperform inflation, basically, right? Just so you don't lose value. Does that seem to make sense to you that you should have to outperform your money by using your money to buy other things? No, it's completely irrational. So your savings account, money should not just be something you spend. It should be something you save. It should be the savings vehicle that outperforms everything else. Just in a world of fiat money, which is, off the gold standard, where they are going to, as you said, be irresponsible, run up the debt, print more money to solve every problem, send out stimulus. You can't save money. Like when I was a kid, you saved money, even in the 80s. I mean, as crazy as it was, interest rates were like 14% or something. I could put money in a savings account and earn 10% a year at that time. That was crazy, right? You didn't have to do anything else. You didn't need to buy stocks. You didn't need to buy gold. Someone might give you a bond for like $50 that in 10 years becomes 100, but your money actually went up in value, at least kept pace to some degree with inflation, or you felt like it did.
Yeah.
Now that we've gone into this environment where like zero rates became the expectation, it's insanity. You're just never going to beat inflation unless you find something to invest in. That's a broken system.
Yeah, for sure. And I mean, that's why we're sitting, I believe the number is $1 trillion gets added to the US debt every 100 days on interest payments.
That was at the peak of it, but yeah, you're basically, for interest payments now, it's the top line item on the United States budget sheet. Like even
it's
far
more than
exceeds military.
Yeah.
I mean, you're talking about $1.2 trillion a year just in interest payments on the United States debt. And that's a debt that, to your point, is increasing by trillions a year. So those are going to only go up. That's what you call a debt spiral, last time I checked. And people can find mental gymnastics to talk about how strong the United States is and how that will be solved. But in the history of mankind, no debt spiral has ever been solved by anything but default and collapse.
Yeah, hence all of Ray Dalio's theories about the change in world order, right?
Yeah, for the fourth turning. But listen, a lot of guys like him end up getting discredited right before they're correct. Like they say it for years and they say, listen, I don't know when it's going to happen. And people say you've been hyperbolic and crying and saying that this is going to happen forever. And then it doesn't happen. Then the guy dies and like you go through a 10-year like depression or something like historically, And so it's very hard to time these things, but it's inevitable. No global reserve currency has ever lasted forever. The United States dollar has had a very long run already historically. No leading civilization has ever lasted as the leading civilization forever. And it's almost always because of money. Even the Roman Empire collapsed because of money, right? Mm-hmm. People can talk about all the reasons the Roman Empire collapsed is because they used solid gold as money. And eventually they had more soldiers to pay. So they started putting other metals in with the gold. The soldiers started demanding higher payment. They inflated the money supply by creating less naturally gold coins, and people started to quit and the Roman Empire collapsed. Right. And that's the story of most things. And it's always, always, always tied to devaluation of the money.
Yeah. Okay. Now, you mentioned you don't like the comparison of Bitcoin to digital gold. Why?
So I like the comparison of Bitcoin to digital gold when you're comparing the properties and value proposition, but I hate it because people always conflate value with price. And so you have these moments, you could take a look now. I don't know when this will come out, but obviously gold has been skyrocketing, right? And stocks have dumped, gold's gone up, and Bitcoin has actually kind of remained flat, which is beautiful. It's uncorrelated. That's what I've always said. That's what you want. But the minute it doesn't trade exactly like gold, people start to say that the digital gold narrative is stupid because they conflate price with value. But if you look at the properties of money, what you want your money to be harder, not softer, right? Fiat is the softest form of money. It's inflated, all these things we've talked about. The harder it is, the less of it there is, the more deflationary it is, the lower the supply. And that's the reason that gold has kept its value for thousands of years, which I think is amazing. And you're seeing it still as a flight to safety now in 2025. But Bitcoin is superior to gold in literally every single way, right? So maybe not in price today, if you look at it, but think about all the problems that gold has as actually being money. So it's a great store of value to whatever degree, which is one property of money. But then you have to talk about how you actually use it. Like, think about the divisibility of gold. If we actually ended up in a Mad Max future society, which I don't think is going to happen, well, how easy is it to take your bar of gold and pay someone $10, right? You're going to go slice it off and weigh it and do all those things. Well, Bitcoin is basically infinitely fractionally, right? Mm-hmm. So you can fractionalize Bitcoin down to a few pennies or lower. So it's much easier to actually use, right? Think about portability. You want your money to be able to move. If you're running from your government and crossing a border, are you going to take a truck full of gold? Or you can take your Bitcoin seed phrases in your mind anywhere you go and it can never be confiscated, right? You don't want your money to be able to be confiscated. Just think of all the properties you would want from your money and think, do I want something that's heavy and physical for that? Or do I want something that's light and digital and fast and cheap for that? Right. And so the digital gold narrative makes a lot of sense if you're talking about the properties, but you have to then accept that Bitcoin is far superior for all those reasons. But it doesn't mean that if you buy it and there's a moment of global collapse, that it's going to behave like gold in the short term. Right. And so it's just this price versus value thing is very, very frustrating. There's also people who say gold trades like a tech stock. Right. And like it's a risk on asset. Well, if you're from Wall Street and you view literally everything as a tradable asset, then yes. But if you're a libertarian or you're someone who believes that you should have control of your own money, none of that matters because you want to own Bitcoin because you want to own Bitcoin, right? And you don't want something that's controlled by the government or Wall Street. So it's so many things to so many different people that I think just saying digital gold and that becoming the prevailing narrative is really diminishing to the value of it.
The explanation. And I just want to zoom out there on something. So you keep on mentioning fiat money, and obviously in these circles, it gets thrown around. But for those who don't know, tell us what you mean by that and how that ties into 1971 when President Nixon took the US off the gold standard.
Yeah, I mean, it's basically a currency. Fiat money is a currency that has no intrinsic value, right? We always talk about what is intrinsic value, but it's government backed. It's not backed by any commodity like we are in the gold standard, and it's completely controlled by a central bank. And you can go down a deep rabbit hole of who controls the central banks, but I can promise you it's not the government, right? And so this fiat money gives you a hell of a lot more flexibility to move things around for trade and all those, which some view as superior, but it's basically a paper certificate with no real backing that can be printed endlessly. So as you mentioned, I mean, there's a long history of the gold standard. So 1971 was kind of the straw that broke the camel's back. Obviously, there was a time before that where the United States had a contentious relationship with gold and the Great Depression and things like that. But basically, the idea was that every dollar was backed by a certain amount of gold sitting in Fort Knox, in a bank. So you couldn't print more money unless you had the equal value in gold sitting behind it, right? And the minute that we went off that standard, governments became free to use their currencies basically as weapons to fight against each other. And that usually means a race to the bottom, right? Making it cheaper so you get easier trade and devaluing it and printing more. So that's what you have when we talk about fiat currency. You have currency with no backing that can be infinitely inflated by a government as long as it doesn't inflate too far. And it's generally backed by trust in your government. And who trusts their government in 2025? I would say very, very few people. And so, what do you want? I want something that is a bridge between gold and that, right? Because for all the reasons that we said before.
Got it. Yeah. Biggest myth about Bitcoin in 2025 that still annoys you?
There's so many. So there's been classics like the greatest hits of FUD, as we call it, fear, uncertainty, and doubt, that come back every time the price drops or anytime anything happens with Bitcoin. It's just absurd. One of my favorites, obviously, is the energy debate, that it's going to boil the oceans, that it's using enough electricity to end the entire planet in 5 minutes, right? And you take a rational look at that, and like washing machines and Christmas lights use more energy than the entire Bitcoin network. So it's just a matter of what you choose to do with your energy. But in the very early days of Bitcoin, when the network wasn't using as much energy, it was more reliant, I would say, on dirty energy or coal and things like that. But as the industry evolved, and mining especially, what happens is the miners that are successful go to the source of the electricity. And so a hydroelectric plant in China or an oil field in Texas, that's where the huge mining fields are. And what people don't realize is that most energy is wasted, or at least 40 to 50% of energy that's created is generally wasted, especially in the case of oil in Texas. There's what's called flaring. And so when they're creating electricity from oil, a ton of it is flared off and is wasted, right? Well, Bitcoin miners go to the source and they use the flared, wasted energy that would not have been used otherwise to power their miners almost exclusively. So there's literally no energy extra being used by Bitcoin miners in those cases. So if you don't understand that, you just look at the amount of electricity being used. Yeah, I understand. But it's sort of like saying, that Teslas are bad for the environment because the charger is using electricity or something, right? It could still be better. But everything uses energy. There's just no way. And to be honest, what's killed that debate even more than anything probably is that AI uses a hell of a lot more electricity than crypto. So there's a new enemy, right? Mm-hmm. But the classics are always the environmental FUD, and of course that it's only used for criminal activity and for drugs and
cocaine and prostitutes and yeah.
I can't remember the exact statistic, but I think it's like 95% of United States bills have like cocaine residue on them. It's amazing.
Yeah. So if you're hating
Yachties are responsible for like 84% of that, I've heard. But
I'm charter guests.
I was going to say, actually, guests on yachts are responsible for it. But the yachties just get it in tips, hopefully. But
yeah, but in all seriousness, I mean, if Bitcoin gets blamed for facilitating criminal activities and endeavors, then they should just basically burn all the bills and start anew. It's just human nature.
We all know that cash is the best thing for criminals. The thing about Bitcoin and cryptocurrency is they're public blockchains. They've been used to track down more criminals than have been able to succeed using it because the transactions are literally public. Yes. So it's literally just nonsensical. And at the end of the day, Bitcoin is an agnostic technology, right? So people are going to use it for good. People are going to use it for bad. The argument that Bitcoin should be banned because there's a few illicit transactions on it is really no different than saying that Tim Cook should be in jail and Apple should be, not allowed to make phones because drug dealers use phones to facilitate deals. It's really literally no different. So it's just nonsense.
Yeah. And tell me, how does the little guy win in Bitcoin? Why is this such a different asset class when it comes to retail investors versus financial institutions?
Well, the beauty of Bitcoin is that everyone wins at every level as long as they're willing to be patient, right? So we all know that it's extremely volatile and everybody wants to puke a little bit when they put $100 into something and they turn around a month later, it's $40, right? But in every case with Bitcoin, if you had just waited a little longer, it became $400, right? So I mean, if you're doing it as an investment, never invest in anything you can't afford to lose. But I do it in my mind as savings. And if that's not something I'm going to spend tomorrow anyways, then I don't really care about the volatility. But at the end of the day, Bitcoin is a savings account to me, right? For all the reasons we said before, it's money that should grow in value as it becomes more scarce. And that's a hell of a lot better than putting dollars in the bank. And frankly, as I also said before, nobody here, myself included, is a professional investor 24/7, 365. And that's what you need on your team to make your money outpace inflation. Bitcoin can do that on its own. It always has historically. So just slowly dollar cost averaging, not worrying about the price you buy it at, with no plan to sell it anytime soon, kind of like you would save for your retirement, you're going to win. You're going to win. It's just that people can't handle the volatility and they can't stomach looking at their balance. I mean, there's a reason that if you are an investment advisor, you tell your customers, look at it every 6 months. Like your whole portfolio, check it quarterly and we'll rebalance a little bit, talk about your goals. But if you look at it every day, imagine if people looked at the value of their house on a chart every single day and panic sold their house when it went down 10%. View Bitcoin as real estate, something you're holding for the long term that you don't want to sell immediately. And it takes all of that out of it. But the little guy wins because they're going to beat inflation over time if they slowly buy Bitcoin.
Yeah, and I believe that the number is no one that's ever held Bitcoin for longer than 4 years has lost money.
Awesome.
So what comes with that, and that ties into money psychology, especially for people amongst my generation and younger. The whole instant gratification craze and people wanting to 2x their money right now, and unfortunately, because it's often put in the same WhatsApp group as all these other crypto coins, it's tough to stay disciplined because every month diligently dollar cost averaging into Bitcoin and buying $200 on every Thursday and just ticking. And then I go to a yachty event and I hear about someone that put $1,000 into Fiat coin and overnight made $100,000. Human emotion is like, big FOMO there. I'm like, fuck, I could have done a bit of exposure to that. But this guy's not going to sell when that's at the top, is he? He's going to hold on and think that the 100K is going to turn into a million.
Gains.
And that's
paper gains. You never sell. You never listen, people who say, so this is the reason you dollar cost average is because let's say Bitcoin's $100,000 and in your mind, you're like, I'm definitely buying if it goes to 80,000. I can promise you the minute it's at 80,000, you're panicking and you're going to buy at 70 because it's at 80. It's got to be going to 70. Well, you get 70, it's going to 50. There's no way, right? You're never going to buy the bottom and you're never going to sell the top. It's just not going to happen. And to your point, the guy who makes 100,000 in Fiat coin either wastes or loses that money and round trips it and loses their initial investment 99 times out of 100. I've learned it the hard way. I think anybody who's been here a while has learned it the hard way. But this is kind of like an old anecdote. I think my grandfather used to tell me about. He said, any fast money, you're just renting it. You're borrowing it until you hand it to the next person who's the rightful owner. Like there's really no such thing as making and keeping fast money.
Love that.
That's why like 30% of lottery, 50% I think of people who win the lottery are bankrupt within 3 years, no matter how much money it is.
Now that we have gone over the dollar cost average strategy, which we're going to zoom into a bit more in a few questions, one of the most frequent questions I get, and I also posted a question poll on my Instagram for you, and pretty much 90% of the questions were in line with this. Is it not too late to invest in Bitcoin?
It's definitely not too late. The price is, I mean, you shouldn't even look at the price for all the reasons that we said before, because once again, price and value are not the same. So as long as you assume that the government is going to keep doing what the government is doing, then there's no price that's too low for Bitcoin. And if you want good examples of that, look no further than Michael Saylor or any country or any company that's just now starting to dollar cost average into Bitcoin. Right? Michael Saylor is a bit of a unicorn, obviously, for those who follow his company, MicroStrategy, now known as Strategy. But he basically just keeps raising debt in dollars, cheap debt, and taking his inflating dollars and using it to buy Bitcoin. Right? And many people think it's aggressive. I think it's absolutely brilliant. But there's new companies just starting. GameStop just announced they're going to put $1.8 billion of their treasury into Bitcoin. The United States just announced that it's going to have a strategic Bitcoin reserve, which means that once they start doing that, every country in the world is going to follow. Those countries aren't mad they didn't buy at 5,000. They just want to get it before it's 1 million. Right. Yeah. And I know that sounds crazy, but I really do believe that one day, I can't put it on a timeline, that Bitcoin will be $1 million. But that's mostly because of the diminishing value of the denominator. Right. Bitcoiners start to just say one Bitcoin is one Bitcoin. Right. Because it literally doesn't matter what it's priced in dollars, because dollars are going to go down. But if Bitcoin's $1 million, it just means that your dollar has probably lost many multiples of its buying power over time. And I think every single one of us has some grandma that once told them how a Coke costs 5 cents. Right now they're like $2. Perfect example. So even if Bitcoin did nothing on its own, but basically stays steady and the dollar continues to devalue, that's where you end up. Right. Yeah. And so the denominator is really what's important when you talk about asset inflation. The only reason that rich people want to own hard assets because they know the dollar is going down, not because that asset is naturally going up. Right. And so that's what you're trying to do here. So I would say you're really early. Actually, I would make the point, which my friend Matt Hogan from Bitwise often makes, that right now is actually the best price to buy Bitcoin at from a risk reward perspective, because until now, or certainly until it was 60 or 70,000, before we had ETFs really, and the government's talking about it, you still had that sort of, could this thing go to zero question in your mind? Like there was still risk to buying it, that it could be worth nothing one day. That risk is completely gone now that you have governments and Wall Street and everybody backing it. So now you've gotten rid of all the like really major downside risk. So it's a great price in my mind. Actually, I think it's a really great price because it was just 109,000, a couple months ago.
Yeah, that's a really good point, because you're right. Up until the ETFs launched and the institutional adoption really started ramping up, there was that chance of it. It was still very much in the crypto
fringe.
What if
the United States government, which was very possible with the last administration, had attempted to literally ban it, or ban every on-ramp, right? They literally made it almost impossible for people to get banked with their crypto accounts and such, including the exchanges themselves. But if they had succeeded and made it basically illegal in the United States, there's a risk it could have gone down to $5,000-$10,000. You never know. All those risks are gone now. So right now, you really know that your downside is capped massively.
Okay, well, let's continue on that trend, and I want to create a little thought experiment, hypothetical scenario. Me, I'm a deckhand on a yacht. We just had charter guests on the boat. We just had the Melker family. Daddy Scott is super pleased and rolling in cash because of Bitcoin reaching all-time high. So he leaves a nice steady tip to the crew. The crew receives $2,000 each. And me as the decky decides I want to allocate $1,000 into crypto. How would you go about it step by step, taking into consideration I don't want to be scammed. I don't know what exchange to use. What is the best way for me to allocate this $1,000 into Bitcoin as a freshie?
Okay, so first, it depends on where you're from, obviously, but I would go to one of the biggest, most reputable exchanges that do. So this is anti-Bitcoiner, but that do require KYC, that are probably insured, that probably have safe custody, that are probably well in line with their government. I'll just speak as an American. I would go to Coinbase first, right? That's where BlackRock and the ETFs are custodying. Good enough for them, good enough for me, right? Set up an account, make sure that you have all of the security in place. And that means that you either get 2FA, never on your phone, never use SMS two-factor authorization for anything, period. Do not ever have someone text you a code. If you get SIM swapped, which one day you will, I've had it happen to me multiple times until I got a company that literally protects my SIM card. Your code will eventually get texted to a scammer or a hacker who then takes all your money. Okay, so you want to do that on a separate device, Google Authenticator or something like that. Okay, so at least you're secure. Now you have a pretty secure, at least you can go way deeper, by the way, but a pretty secure setup for your assets. And we're only talking about $1,000. We're not talking about $1 million right now, right? So you'll increase your security as the value of your assets go up. I would personally take that $1,000 and probably dollar cost average once a month for 10 months, $100 each time. If you're more aggressive, you just buy Bitcoin right away, or do it, as you said, kind of on a weekly basis. But depending on if that's going to be the only 1,000 or if you're planning to add more, would be my schedule of dollar cost averaging. Now, if you understand the asset class beyond just, hey, I want to buy this because it's going up, maybe you say, I'm going to take 70 or 80% and put it into Bitcoin, and I'm going to take another 30% and put it into something else more speculative in the asset class. I think the natural first step would have always been Ethereum. Now I would say it's probably Solana. So maybe put 15, 20% into Solana. And then if you're really passionate about some other thing, maybe 10%, right? And I would do it without thinking about price and chart. Do it when you have the money, knowing it's going to go up more in the future, and basically just break it down like that. But unless you've done the work and you've actually studied this stuff, I would do just Bitcoin. If you want to buy Solana, you better go understand why you want to buy Solana, right? I want to buy it because it's like it's like being the house in the casino. And so for me, that's a good bet because all this meme coin nonsense is happening there. And for people to participate in that, they need to buy Solana. So if that has another big bubble, Solana should benefit. Very obvious to me, but that's not the same thing as like building a savings account with Bitcoin.
Yeah. Okay. And talk to us about, for those that don't know, about offline/cold storage. When does that come into play? Is that important for someone just starting out?
It is. So it really depends, again, on what exchange you're using, how you have your security set up with that exchange, how seriously you take it, and how much you trust yourself. So being your own bank, which is effectively what you're doing when you decide to self-custody, is a huge, huge, huge responsibility. And some would argue that unless you are prepared to take that exceptionally seriously, that you're probably a bigger point of failure yourself than an exchange. And I can tell you, anecdotally, that's true. I know so many people who have thought they had everything in order, lost their private keys, had something go wrong, scrambling to find ways to recover their Bitcoin. So I think you have to be a pretty true, deep believer to want to go down the self-custody route, especially now that security is improving on exchanges. When I started, security on exchanges was terrible. You really had to self-custody. Now I can see the argument for doing it on exchange. Like Coinbase, for example, you can use a YubiKey. I don't know if you know what that is, but it's a hardware key basically. So it has to be plugged into your USB. And when you sign in or do a transaction or anything, you have to physically touch that to be able to even use your account. So for me, for example, if I'm on Coinbase to sign into Coinbase, I use an encrypted email account, right? Not a Gmail, an encrypted email account that email account requires two-factor authorization which I keep on a separate device in a safe somewhere. I'm crazy, right? I go way too far. But so even if you have my phone, you can't get my 2FA. So if you kidnap me and you try to sign into my Coinbase, you can't do that on my phone. You have to get this other device that's in a safe. I think everybody should have an old phone or something that is blanked except for Google Authenticator and keep their 2FA on there. Okay. So now let's say I want to sign in. I have to take this thing that's also in a safe, put it in the computer that's physically in my presence and touch it to even sign in. And I have to do the same for transactions. Oh, and by the way, if you want to add another bank account or anything or a wallet to withdraw to, you also have to have that thing. So you can only withdraw to places I have set in advance that require this, right? So that's pretty damn secure. Like, I guess you have the risk that Coinbase goes under or something like an FTX, but they're pretty highly regulated, pretty well regarded in the United States. That's why I said
public listed company.
It's not just some random exchange in this case, right? So I think for most people, that's probably equal to self-custody. But self-custody is just at a basic level. It means that you take basically everything offline. You get a wallet, and a lot of people think that Bitcoin's on the wallet, but it's not. What the wallet is just protecting the actual keys or like the code to getting your Bitcoin. Bitcoin's on the network, right? So it's just who can access it through the private keys. And so you have this little wallet, you plug it in, and that's basically protecting your keys. And you need to use that to be able to send any transactions. Definitely the superior way down the road, but even that has its point of failure. So then you get deeper. Like, a lot of my Bitcoin is in what's called a multi-sig setup, which means that there's basically 5 wallets, and you need to sign 3 of them to be able to send a transaction from my account. And all of those are geographically dispersed in places that nobody, but like, think about all of how crazy this is. To me, it was natural, and I came into it at a time when the exchanges weren't as good, but like, if I fall on my head and I'm in the hospital and my wife needs to get access, it's a really serious scavenger hunt.
Yeah.
Right. So like, you just need to balance it. I would say that for people who have a small percentage of their net worth, just really set up an exchange well and do it there until you feel like it's enough and you have enough trust in yourself. Also, like, you guys are on a boat. Where's your wallet?
Mm-hmm.
Where's your private keys? Are they written down on paper? Do they get wet? You know what I mean? Like, I was it's funny. I was at UFC last week, and I interviewed Kamaru Usman, who's like one of the most famous fighters ever. And it was like a cautionary tale in everything you could do wrong in crypto ever. Like, it's hilarious. And we talked about it, but then we're offline, and like, I wish I had recorded this, and we're just kind of hanging out. He's like, "Is Trust Wallet good?" And I'm like, "Yeah, it's a good wallet." He's like, "But what's up with like the keys and all this stuff?" And then he tells me this story. He's like, "I switched phones, and I had all this money on Trust Wallet. I got rid of my old phone. I got my new phone. I go to Trust Wallet. It says import your private keys." He's like, "What the hell is that?" He's like, "I guess I probably saved them at some point, but I didn't think about it." You got to remember, normal people aren't thinking like, I need to. They just open the wallet. It says, write down these 16 words. It's like something you do on the way. It's like clicking I agree on iTunes, right? Like, yeah, okay, I read the whole thing. Yeah, right. And so he's like, so then I forgot about it. And he's like, a year and a half later, I'm like in my iPhone files, and I see a screenshot of 16 words. It says Trust Wallet. And he's like, holy crap. It goes to his Trust Wallet, imports the 16 words, and had $125,000 in there. Okay. So like, do you think self-custody is for everyone? No. And most people go to a wallet, and why would you know how important that phrase is if you don't know how important that phrase is? Because you're a believer.
Yeah.
You don't write it down, you don't save it, or you write it down and put it somewhere and can't remember where you put it. Dude, I lose things all the time. It's terrifying. It's terrifying.
It's true. I think this is where a lot of people get lost, and I'm pretty sure that a fairly large percentage of people listening right now will be like, "Oh, okay, I don't think crypto's for me because this sounds like a fucking nightmare." Me living on a boat, I got traumatized by the whole FTX debacle. I lost a few $1,000 in Celsius on my exchange, and then I was like, okay, never again. I'm going to self-custody. I got my ledger set up, and then because I have a unique situation living on a boat, which is firstly very fire prone, secondly very sink prone. No offense, Captain. But I went and made little dog tags, little pet tags, engraved them. They are dispersed on 3 separate continents, so in different family members' safes.
Yeah.
So I have that. I have redundancy.
But most people don't want that with their money, So it's
exactly.
You have to be special to want that, is my point.
Yes.
I have similar things, but it's wild.
It's well, but I guess like with all new technology, there's friction. It's going to take a while. Dial-up internet sucked compared to what we have now with Starlink, but it was internet back then nonetheless. Um, okay, so now that we've covered those steps, and thank you for that, that's a pretty thorough run through. Let's talk about the Bitcoin 4-year cycle, and then your top tips for bull and bear markets.
So the 4-year cycle has not repeated as anticipated this time. And I think that's because of the institutionalization and just mainstream acceptance of Bitcoin. So in the past, you had a 4-year cycle where, because of the halving, some would say, or maybe the election cycle, which perfectly aligns, or maybe global liquidity cycles for whatever reason, Bitcoin would basically have these massive bull and bear peaks and troughs, right? So it goes up 20 times, puts in a massive high. Basically, you go through a bear market for a couple of years, and almost exactly 4 years later, it hits a new high and comes down. And every 4 years, it just repeats these exact same cycles, right? Many people think that's because of the supply reduction, but that supply reduction is almost a rounding error now with the size of Bitcoin. So that made a lot more sense when Bitcoin was $100, and cutting the supply in half with that demand dynamic was massive. So I think that's changed. But a bigger part of the 4-year cycle was kind of what the rest of the market did when Bitcoin made those moves. So Bitcoin would go up massively, and then it would kind of have those moments where it would go sideways for a while before again, and the altcoin market would go absolutely insane. And you'd see these 100x, 1000x, more than 1000x gains. That hasn't happened this time at all, right? Mm-hmm. And so I think that's because most people are just buying Bitcoin. And back then, it was the same people that wanted altcoins and wanted Bitcoin. So when Bitcoin got quote unquote boring or went sideways, they would go try to find a way to compound their money faster, and they would use their Bitcoin to buy altcoins. And that's sort of why that cycle happened. This time, there's been Bitcoin, and there's been the completely degenerate casino meme coin market, where I think all of those crypto natives that used to participate in the rest of the market, they're over there just killing each other. And there's been very little in between. So there is tons of utility. There's incredible things being bought, but the speculators haven't been participating in any of that in the middle, right? So there's Bitcoin. It's kind of a barbell. Got Bitcoin, the most crazy, degenerative, speculative stuff on one side, and then everything else is a flat line in between, right? Mm-hmm. And so I think to some degree, the 4-year cycle is dead in that way. It doesn't mean those things won't have their moment, but I think you have to be more selective. It used to be that you could just throw a dart and wait a week and your thing would go up 5 times. I think that those days of super easy money are probably pretty much gone. And if you're participating in that, it's in meme coins. Instead of it being over months or 6 months, it happens in 6 hours. Like something is up and down and gone and forgotten like 1,000 times faster than it would have been in the past, because Solana's fast. You can do it on decentralized exchanges. You don't need to sign up for a centralized exchange like you had to in the past to do it. Pretty complex to get into all of that, but that's my feeling sort of on the cycle. If you look at the investment wisdom of any of the greats, the famous trading quotes, the famous investing quotes, they're always about having cash and buying everything you can in a bear market. So you want to talk about what to do in a bear market? Well, you hopefully either you've saved money to invest more, because the bigger the dip you buy, if you believe that things go back up, and generally markets always do, that's where the real money is to be made. Like the famous quotes, buy blood when it's in the streets, even if it's your own. Look at what Warren Buffett's doing. Guy's got over $300 billion in cash. How has he done that? By selling Apple and all these great companies into a bull market, and then being patient because he believes that a massive correction is going to come and he's going to be able to buy more, raising cash in the bull market. So listen, if you're buying Bitcoin forever, like someone like me, doesn't really matter. I'm just buying Bitcoin, right? But if you even have a little bit of trader in you, or you're trying to compound, well, when everybody says it's going to 1 million and it's at 105 and it seems like euphoria is starting, you sell a little bit. And then when everybody tells you it's going to 0 and it's completely dead and it's at 70, you buy a little bit.
You buy,
right? And frankly, if you're new to this, you are probably your best counter indicator. When you want to buy, it's always going to be because your like Uber driver finally convinced you that like this is the greatest investment of all time. But when has the Uber driver or the barber ever been right? Right? If he's hearing about it and he's telling you to buy Fartcoin because it's the new paradigm, you should be shorting Fartcoin. right? Well, you should just be shorting Farquhar. But and when they're all and everybody's depressed and has lost everything, that's the blood in the streets, and that's when you buy. And every investing great will tell you that same thing for hundreds of years. So listen, at the end of the day, I would go back to our original theme: buy high, buy low, don't care, right? Just dollar cost average. But if you're playing in the rest of the market, if you make a quick 5-10x, sell it, sell some. If you ever have, this is maybe a better lesson. If you have profit to a level that it will meaningfully impact your life, even if you think something is going way up, sell some. Bottom line, like, you live on this planet one time, and it's really fun to see your portfolio balance really high or up or down or low. But if you can do what you did, listen, as much as you had those bad experiences, you did pay off your debt, and you did buy someone a car, and you did do things that meaningfully could change your life with that money. You succeeded. Like, you can't always compare yourself to what could have been. Trust me, I was one of Voyager's in that same collapse, one of their biggest creditors, right? I lost more than I can stomach on any given occasion when I think about it. But yeah, I've learned every hard lesson. It's been terrible, and I've learned them as well. But if you can do something that will make your life better, whether that's pay off a debt, even if it's take a trip, something you've really always wanted to do, I would always take the experience over the portfolio balance. So I would say in a bull market, if you can improve your life, sell something. I'm not saying like you, and by the way, you don't have to make like binary decisions. It's not like sell it all or buy it all, sell 10% and go on the trip.
Yeah.
It's fine. Enjoy your life.
It's the roll ball, the lifestyle chips.
That's right.
I enjoy that a lot because it's also, like you said, you're here one time. You've had 2 epic experiences chartering a yacht, which was, in my assumptions, probably from bull run winnings. So it's like make precious memories while you have it. Like, it's futile being hit by a bus tomorrow and then people saying, "Oh, Scott's such a cool guy. He's got $50 million in Bitcoin chilling on his thingy. He's been so good," instead of, "Oh, I gave such incredible experiences to my family." So
that's so much more important to me. I've learned, we all have our life lessons, but like every male in my family has had something fundamentally like change their life for the worse health wise in like by the time they were 50 or 55, all of them. And so I've always learned the lesson that like saving everything for my 65 or 70 retirement so that I can do all the things I would have loved to do now when I'm 70 just makes no sense. That's not how I approach my life. Anyone who's listening, you're probably mostly young. Like, the value of an experience when you're 25 is exponentially greater than the value of the same experience when you're 75. And the life you're living right now with your complete health and freedom is a higher quality and higher value life than you will have when you're older, no matter what. You have to know that you're going to be stable when you're older, but saving that trip you're dying to take when you're 30 for when you're 70 is not going to be the same. You're going to enjoy it 100 times more when you're 30, and that's worth every penny you would spend on it right now.
That's epic advice. Wow, didn't know you're a deep guy. You gave me some fucking.
I have my moments. Well, listen, my dad, my brother, like everyone in my family, they have major health issues at young ages that have derailed all of their plans to enjoy the fruits of their hard work, and that's not going to be me.
Here you go. Sometimes you need a pivotal moment like that, eh? Okay, let's take a more of a fun and personal twist here. If you weren't in crypto, what would you be doing right now?
I'd be homeless. No. Well, listen, I was a DJ, so I would probably still be doing something in music. I can just say that it'd be hard to say exactly what I would be doing because I'm not the biggest planner, but I would be working for myself in some capacity, creating or building something, right? This kind of was the natural path that I went on, but I think I would still be probably doing something in music. I don't think I'd be out on the road DJing at almost 50, although there's plenty of guys who do it. But I think I would still be probably in the music industry. But either way, I would never have a job. I can tell you that, or anything that felt like one.
Not a big boy job.
No, whatever that is.
What is, so you run the Wolf of Wall Street podcast. Big shout out to that show, everybody. Please tune in. It's really, really cool. They do, my favorite is Macro Mondays, where they kind of get into the nuts and bolts of things. They do Friday 5, which is the 5 biggest news
Stories
headlines of the week.
Yeah.
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 So running that podcast, what is the wildest moment you've had on air on that podcast?
That's a tough. Oh, for sure. For sure. Do you know Max Kaiser?
Yeah.
Okay. So Max is crazy, right?
He's the ultimate
he's
maxi,
a multi-billionaire Bitcoiner. Like, to talk about fuck you money, like this, whatever. We can say that here, right? Yeah, you said it at the beginning. It's literally called the richest fuck podcast. Okay. Well, I'm sitting with him in Miami. It's either 2021 or 2022, recording live at the Bitcoin conference. And we were talking about Elizabeth Warren, and he went on like a stream of expletives. Like, I don't blush much, but I think it ended with him saying can I say? I mean, I think he called it like a dick sucking crack whore or something. Like, and that was just like one and then we like had this debate as to whether to publish it or not. And like, you can say whatever you want on my shows too, but man, it was deep. And so like listening to him just off the rails about Elizabeth Warren was probably the craziest. I mean, we've had a lot of fights and arguments and crazy things and personal things, but talking to him when he's really going for it is a unique experience.
Yeah, well, I mean, I don't think I would ever have the capacity to get him on a show, but that is good to know because
get him.
Good clickbait, but piss off the big female cohort. Okay, what is your most unpopular crypto opinion? Something that pisses off the Bitcoin maximalists or the crypto boys in general. What is your unpopular opinion?
That's really a tough one, but it just depends on with which audience, because crypto is so tribal that it's really easy to piss off any of those people by just talking about any of those other people. Bitcoin maxis are like the most easily triggered people in the world. If you even talk about crypto, like if you even acknowledge the existence of Ethereum, for example, there's Bitcoin maximalists who will call you names that you never even knew and will never make it to the dictionary. So being in my position and having the audacity to actually talk about the entire asset class, whether favorable or in a negative way, pisses off Bitcoin maxis, right? Now you got the XRP army. Those guys are the most like oversensitive. Not all of them. I'm going to get in trouble. I'm sure XRP is wonderful, but like all these tribalistic, mine is the best, anything bad you say, I'm coming after you for the rest of your life, is very crypto. Imagine like taking every sports team in the world and how much they hate each other and like putting money on top of it. Well, that's what you have in crypto, right? It's like, not only is it like your passion, you were born here or whatever, but like your money is also at stake when you make an opinion. Yeah. And so I would say like the most unpopular opinion is being objective and talking about all of it, because there's literally nobody that wants that. Mm-hmm. You know, the meme coiners don't want to be told that their shit is a scam. The Bitcoiners don't want to be told that there's anything of value anywhere else in the market. And then there's this wide spectrum of people in between. So every day of my life, when we choose a topic, we know we're going to alienate like 25% of the audience.
Well, I guess that kind of makes all of this exciting too, because it's finally there's some excitement in finance, you know?
Yeah, I mean, it's like being in Star Wars. Like let the hate flow through you. You know, it empowers you.
Yes. Okay, for newbies entering, once again, most of my listeners are yachties, stumbling upon this channel to create a life of wealth and abundance. I'm really big on assigning resources to them. So for our current topic, what are books, podcasts, anything you can point them in the right direction to get started?
So, yeah, I mean, you got to read the Bitcoin Standard by Seyfuddin Amos. I think everyone points to that as their kind of aha moment for why Bitcoin matters and why the rest of the system is so broken. He also wrote the Fiat Standard as a follow-up, which is excellent. It kind of speaks to whether you believe Bitcoin is the answer or not. You're going to very deeply understand the problems with the system in a way that is very palatable and very clear. So I would absolutely just start with the Bitcoin Standard. Listen, I and many others write newsletters and have podcasts. It just depends on what you want to learn about, right? If you deeply want to care about Bitcoin specifically, there's a lot of Bitcoin only podcasts that are probably much better than mine. I think Robert Breedlove is great. Natalie Brunell is great. A lot of them that I listen to very frequently. I mean, if you want to go more down the sort of all-encompassing route, I think my show probably, we work very hard to educate people on those things. Bitwise, which is one of the issuers of the ETFs, Matt Hogan, their CIO, is just incredible, and he writes a letter every week. I'm sure it's on the Bitwise site, but you can get it via email. It just really breaks down how kind of like the questions he's hearing on the road, all these questions like, why isn't it a scam? Why would I put my, and he just answers them in simple terms as he would to like an investment advisor. And so I think that's a really good place from an investment perspective to start and understand. Listen, I would just steer clear of all of the, and I'm not saying they're bad people or any of it, but like anything that like is how to get rich on X, or that being blank, not X like the platform, or like this is how to 1,000x your money tomorrow, or $1 million Bitcoin by next week. Here's how, right? I mean, everybody has to do clickbait on YouTube. We're all guilty of it because otherwise the algorithm won't watch it. But you can tell, take this trade on my exchange account for an affiliate fee. Like you can tell kind of who's trying to educate you and maybe who's trying to profit off of you. And for better or for worse, right? But I would just steer very clear of the get rich quick shows and titles. And I think that that's probably what most people see first. To your point, you're in those WhatsApp groups, you see them talking about, they shouldn't even know what Farcoin is. You shouldn't, like if you're looking at the right content and learning from the right places, you should never even hear that name or understand it, right?
You're in a dark circle there, my friend.
Yeah.
Yes.
So
that's good advice, and you're right. The algorithm does spit out the all caps and the crazy thumbnail, and then a gazillion links for
exchanges,
the old pyramid scheme links. So
yeah. And I honestly, I just want to say clearly, I don't think that those are bad people. I don't think they have bad intentions. They're running businesses and they know how to get things to click. It's just, you got to be very careful because they know that more people are going to watch if you try to promise them a quick path to wealth. And it's just not my style to pretend there's a quick path to wealth.
Well, I like those resources, and those kind of got me. Just like people point to Rich Dad Poor Dad to explain real estate and leverage. That is what the Bitcoin Standard does,
right.
and really paints a clear picture. I also read another one called a tiny little book called Magic Internet Money. A little book about Bitcoin, which was pretty interesting.
I've never read that.
I forgot to write that, but that really dumbed it down for those that aren't really familiar with certain financial jargon.
Yeah.
Okay, and then to close things off, I posted a Q&A on my story, and I've been hit with a few questions. Okay. SPF, for those who don't know, Sam Bankman-Fried, the famed ex-CEO, jailed founder. He's in jail. His new cellmate allegedly is Diddy.
was he got moved? Yeah, they were together. SBF got moved after he did that interview with Tucker Carlson that apparently he was not supposed to do. He like hid himself in a room with a phone that he had like smuggled for cigarettes or God knows for what, or ramen or sexual favors, or well, I guess Diddy's there, so maybe baby oil. So they moved him. Yeah.
Well, someone asked there, what do you think SPF and Diddy talk about in jail?
So Tucker Carlson asked him that, and he was like, I don't really know Diddy beyond jail Diddy. I don't know the other Diddy, but he's very kind and nice to me, and I think he's a very personable guy. I probably think that they either talk about ways to escape using baby oil to loosen up the locks, maybe. I don't know. I wouldn't want to be anyone around Diddy in jail, to be quite honest, based on what I've heard. So I'm sure that SPF doesn't get much choice as to what relationship he has with any of these people based on his stature and personality, but well deserved.
It's a good answer. Then, rapid fire, Dogecoin, yay or nay?
Okay. I mean, it depends on the reason. I think that Dogecoin, it's not rapid fire, but I think that it's transcended the meme market and has enough of a community and and sort of narrative that I think it will go up with time. I don't think you want to be owning Dogecoin in 100 years, but I think it could be a good trade or something you can hold for a while, and it will go up again.
Especially because of the acronym of the current Department of Government Efficiency.
Elon just needs to decide one day that he loves it again, and it's going up. So
yeah, that's why I'm holding on to a tiny portion of it for the day they start funding. Love. Yeah.
When I came into crypto, that was the thing I traded the most, when it was a fraction of a penny and you could only trade it against Bitcoin. So I still have a soft spot for the original meme.
It's awesome. And then I have one from your lovely wife, Emmy.
Oh, God.
When are you taking me on the yacht again? Well,
now that apparently everyone we like is leaving the yacht and is not going to work on it, we're going to... How about this? Maybe when your Yachting Investor is so popular that you've outpaced me, we'll just go get on a yacht together as guests.
You heard it here first, folks. Sorry for my fellow yachties. I will be served one day.
Yeah, it's happening. I already see it happening. They don't know, but it's going to happen. And no, listen, now that it's on the other coast, my kids ask me about it every day because they're so spoiled, right? My son was like your co-captain the entire time in his own mind. But I would love to do that now that it's going to be out on the other coast.
Well, we'll get there again. Thank you, Emmy, for your valuable input into my show.
Shouldn't my answer just be when we get a real bull market again? I mean, it's the obvious answer. When Doge goes to the moon.
Should be connected to a price target.
When Fartcoin hits 100 billion market cap.
God, that will be the day. And then to finally close things out, final words for the next generation of investors starting out in a crypto world.
Well, that's the beauty of it, is that they are starting out in a crypto world. So as hard as it's been, the growing pains of explaining these things to people, our kids will all be crypto native. And more importantly, they're just digital native, right? As confusing. Bitcoin is as confusing to me when I heard about it as TikTok, right? Everything digital just doesn't make sense at a certain age. So I think it's important that they will be growing up in a digital world. I think that everything they trade and invest in will be tokenized on a blockchain at some point. And that's not a crazy notion. Larry Fink from BlackRock, the largest asset manager in the planet, says it every day, right? So I think Bitcoin will become sort of the stable, boring investment that everybody makes as a savings account, and that we will see even the most popular stocks, Amazon and Apple and Tesla, traded as tokenized versions of themselves on blockchains with less third-party friction and things like that. But I don't think they need to do much different than just slowly buy Bitcoin with time. I think that's gonna be true in 50 years as much as it is now, even when Bitcoin's at $1 million and they're saying, is it too late?
That's epic. Thanks, Scott. I really appreciate your time today. I'll be sure to add links to your podcast and newsletters, which I thoroughly enjoy, in the show notes. I'm really suspecting this episode is going to pop off, so I really appreciate your input.
Can you add a GoFundMe for my next yacht trip?
It will piss off my entire cohort of yachties, but yes, we can do that.
Come on, man. It's the market. The market.
Thanks, Scott. I really appreciate it. Hope you have a good day.
Thank you, man. Always good to connect.